So hi guys, so wisdom forex wisdom with you guys. So this video is all about support, resistance, and identification of trend lines in the market. So if you tuned in, you are lucky because I'm about to explain lots of things that most people who are on YouTube don't even come about, don't explain. So if you need more videos like this, you could write them in the comments on what videos I should do next, because I don't know where you guys, please, you guys should help me to help you. I don't know what you guys want. So the one with the highest volume is the one I'm going to do a video on. So if you need strategies, you could write them and everything, and I'll get back to you guys. So let's start. So you guys already understand trends, already understand what forex is. So just the trend, how to identify, plot a trend line, identify a change in trend, and support and resistance. So those are the three things we are going to put in. First, we know that an uptrend makes a series of higher highs and higher lows, just like this. Same thing here, series of higher lower highs, lower lows on the downtrend. So when you see higher high, market went high. This is the pullback, which is the higher low. Market went higher again. It broke above the previous higher high, so it came back to do a pullback here. Market went higher one more time. Market came to pull back. Same thing here. Lower low. Market pull back. Lower high. Lower low. Lower high. And it continues like that. That's a downtrend. So this happens in an uptrend. This happens in a downtrend. Last but not least, you guys are about to see the last one. Um, and this happens in consolidation. So this is for the consolidation. This is when market just keeps ranging, creates higher lows, higher highs, higher lows, higher highs. It breaks, just keeps on ranging. So this is a ranging market. You should be waiting for a breakout, or you could buy at the range up or down, or you could wait for a breakout to enter a position. So that's the ranging market. So now let's let's get into the charts and let me explain this whole context. So when you enter into the charts, um yeah, so coming to the chart itself, this is how your chart's gonna be like. And now you have to identify a series of higher lows, higher highs. So now we could say this market is in an uptrend. So we're going to draw a trend line from a trough higher low to a higher high. So this is my trend line because I'm uptrend. So I'm picking here. So if you look at this, I could say this place is like a resistance point because lots of market movement. I'm going to come back to explain the resistance point. So now market is going upwards. Remember, you are going to be adjusting the trend line from time to time. For example, let's say market was moving upwards before, you could make your trend line this way. But when market broke above here and didn't push upwards, the trend line becomes invalid. You guys can see because market is trading below your trend line in one kind of consolidatory manner. So you do not want to use that as your trend line at that point in time. So you could adjust it from time to time. You could just adjust it here that at that point, adjust your trend line. You keep on adjusting until finally I adjusted it to this. So this was now my new trend line. So looking at this is the trend line. Then market broke below it. I don't expect you guys to come here and draw it like this. I just want you guys to respect some levels. The reason I said draw it very close even when market is breaking. Because you could be a breakout trader. I mean, you could trade breakouts here. So what I mean by that is that when market breaks, it goes below, comes down. So from an uptrend, just change trend into a downtrend. So you could be that type of trader. So trend line analysis is actually very simple. You draw it from one trough to another. So a series of lower highs, which is up here for the downtrend, and you draw it down. So this is another trend. So this is a valid trend because the market broke, it went upwards. Now I'm going to tell you how to identify all the changes in the trend, how you know when the trend is screaming over, it's over. You could use indicators, but I prefer you use price action. Now, how do you know when market has changed trends? It's really simple. Now, remember we're in a downtrend right here, right? Say for example I'm in a downtrend. Now market start making lower lows, lower highs, lower lows, lower highs. Let's look at this now. Now, coming here where the trend was about to change, what the market do is went up, it came down. This is the last point in the market, right? This is our last point in the market. Now, market was meant to come down and break here. What I mean is simple. Market was like meant to go for a pullback, break, and continue its trend downwards. But what the market do? Market reversed. And how do you know when market is going to reverse? That's probably the reason you are watching this video right now. So my so so we do this. The moment market breaks above a previous lower high or higher low depending on the trend. So what I mean by this is this. So remember this was the lowest high that created this highest high. The market broke below it, broke above it at this point. So it just shows a change in trend. So market has changed trend. So now you will be looking for bullish opportunities and no longer bearish. So that was what happened here. So now same thing, let's find another one. Okay, so we plotted our trend line. Our trend line can be anywhere as long as it touches two places, one, two, and just goes upwards. So how do we know the trend change? Look at this. Draw a straight line here. Now, market broke, closed below this, so we should be looking for selling opportunities, which was here, and we continue downwards. So it's just like that. Look for a change in the trend, which is a change of character. If you're an ICT trader, I'm not an ICT trader, that's why I don't use those terms. But if this will allow you to understand what I mean, if you've been watching ICT and this will help you understand what I mean, yeah, a change of character just means market broke from that previous point where market was following. Because if you look at this, you could still draw a trend line from here to here at that point in time. The market broke it and the trend line became invalid at that point. So you should be looking for buys anytime market breaks above. Now that is how to identify our trend lines. So we need to, yeah, support and resistance zones. Now now, support zones and resistance zones are actually easy to draw. So we just need two places where market rejected, 2 points where market rejected, or we could just take it as a previous lower lower high or higher high. In some cases, where let's look for 2 points where market rejected and bounced off. So for example now, why I claim this place as support and resistance. Support is down, resistance up. So market, they are both the same thing because once market breaks below a resistance, it turns to support, and when market breaks because a support, it becomes a resistance. So it's just they are interchangeable. So now we are looking for two places where market came to and it reversed. So let's get rid of this and let's find this in the market. So we want to find out our support zone in the market. Looking at this, look at market came up here, it came up, it didn't close above in a way that you like. So you could mark this out as your resistance point. So I could mark this as resistance. It's a zone, not like a straight line, like what I use here. Just use it to mark. So when market comes back, it's probably going to reverse. There were lots of rejection at this zone, so this is a resistance point, a key resistance point. Remember I told you now support would be simpler. Look at this, one, two. So market rejected off this point twice. So market came here, rejected, came here for the second time and rejected. So this is a valid support level. So let's just go into the market. So I won't call this a support, but I'll call this a rejection zone. Yeah, I'll just call this a rejection zone because this is when market started changing trend and actually went to this is highest point in market. Then we could just mark out the lowest point in the market also. These just points that you'll be looking forward to as potential supports and resistance zones. Then this could also be a support. Remember I said when market rejected twice. So look at this, market rejected twice. You could still extend previous resistance or support to the future. Look at market followed it exactly. So this is what I'm trying to say. Market followed it. So that is it for this video. If you guys need more, just give me a follow and write it in the comment and I'll try and make a video. So thank you guys for watching. I hope I see you guys in the next video and Forex Wisdom out.